Okay, on our whiteboard video today, we are going to explain how Bob paid $407 in additional taxes on that extra $1,000 that he took out of his IRA. And some of you may be saying, how is this possible? Can I really pay 40.7% on an additional realized income if I'm only in the 22% tax bracket? What is this thing called the Social Security Tax Torpedo? So we're going to get into a little bit of detail here, so stick with me. Let's go to the whiteboard and let's first understand what is called a provisional income calculation. This is going to determine how much of your Social Security is dragged over from the non-taxable column on the tax return to the taxable column on the tax return. Now, the IRS has kind of thrown a little monkey wrench in this lately. I think they sometimes just change terminology in order to just make our lives more complicated. So they're not really calling this provisional income anymore. They're calling this combined income. But I think that's even more confusing. So I'm going to stick with the old terminology. I've always called it provisional income. That's what we're going to call it. So let's go to the whiteboard. So the question is, will your Social Security benefits be federally taxable? Well, I get that question all the time. Sometimes the answer is yes, sometimes the answer is no. So really it comes down to a maybe. And that maybe is determined by your provisional income calculation. So let's go to this chart and just explain this briefly. So if we look at provisional income, and the definition of provisional income is going to be adjusted gross income, your AGI, before Social Security. Say that before Social Security. So just take your adjustable gross income and we're going to add non-taxable income. And some of you might be saying, wait a second, why am I adding non-taxable income if it's non-taxable? Why would I add that? Well, that's a question for the IRS, but that's how you calculate your modified adjusted gross income to determine how much Social Security is taxable. So we're going to take your adjusted gross income before Social Security, okay? We're going to add non-taxable income. By the way, that would be municipal bond interest. We're not talking about income from a Roth IRA or anything like that. So non-taxable income would be municipal bond interest or tax-free interest income. And then we're going to add 1/2 of your Social Security, okay? 1/2 of your Social Security. So in Bob's example, if you recall back, check on the last video, Bob had, before he was going to take this trip across country to see his grandkids, Bob had $38,000 of IRA income. He was taking out $38,000 of his IRA, individual retirement arrangement, individual retirement account, from his IRA to live on. He also had Social Security of $25,000. So if we're doing this calculation, we're going to take 1/2 of Social Security to determine provisional income, and that would be $12,500, correct? Okay. So 38 plus 12.5, we have a provisional income calculation of $50,500. So that is Bob's provisional income calculation. Now, to determine how much is actually taxable of Social Security, we have to go up and we have to take a look at this chart. So again, Bob is single. We set that up last time. Bob is not married, filing jointly. He is single. So if his provisional income calculation is between $25,000 and $34,000 as a single, up to 50% of the Social Security benefit is considered taxable, okay? So we know Bob has more than $25,000 of provisional income, so he's over that $25,000. We can establish that already. Now, the second calculation is if Bob is single and has and this provisional income calculation is over $34,000, then up to 85% of his Social Security is taxable. Now, logically, you would look at this and say, okay, well, Bob's provisional income is $50,500. That's well over $34,000. So 85% of Bob's Social Security is taxable. That's what you would logically think, right? So if we sketch this out and we say, okay, Bob's Social Security is $25,000. We already established that's how much Bob is getting in Social Security. We multiply that by 85%. That would be $21,250 of his Social Security is taxable. That would be logical, right? Wrong. That is wrong. That is not how you calculate how much Social Security is taxable. So stick with me. This gets a little bit complicated, but not too much. So what we're going to do is we already know Bob's amount is over the $25,000 and it's also over the $34,000. But we have to calculate that first bracket. That first $25,000 to $34,000 that it's over, it'll drag 50% of that amount over to the tax return. So $34,000 minus $24,000 is $25,000 is what? $9,000, right? So we have $9,000 times 50%. Okay, again, 50% dragged over. So what does that equal? That equals $4,500. Perfect. Now, we're also over the $34,000 amount, which drags over 85%. So we take the remaining amount between $50,500 and $34,000. We have $16,500, and that's multiplied by 85%, and that equals $14,025. All right, so we add these two together, and the amount of Social Security that is subject to ordinary income tax for Bob is $18,525. That is the correct answer. Okay, that is the correct answer. That's how much is taxable. So now, let's sketch this out on the 1040 and understand if Bob takes an extra $1,000, why this adds $1,850 to his adjusted gross income. So what we're going to do is we're going to take a look at kind of a snapshot of the center of the first page of the 1040 here. And we're going to kind of sketch this out, and we'll show you a before and an after. So before the trip and after the trip, so you can really understand where this number is coming from. So I want you to focus on two areas here. I want you to focus on 4A, which is IRA distributions, and 6A, which is Social Security tax benefits. And what you'll see here, 4A, you come over here and Bob took out $38,000 of his IRA. Well, that's going to all be dragged over to that taxable column because it is taxable. So under 4B, we're going to write $38,000, okay? Now the next one is pretty interesting. It's the $25,000 of his total Social Security. So we know Bob is receiving $25,000 in Social Security, but we just did that calculation that not all of it is taxable. So we come over here to 6B, and $18,525 is considered taxable, okay? If we add these two together, we have total income $56,525, which is also the adjustable gross income. We're not going to assume any adjustments in this simple example. So Bob's AGI, adjustable gross income, is $56,525. Now, after the trip, right, after the trip, Bob has decided to take out an additional $1,000 from his IRA. So we have $39,000 out of his IRA. We still have that same $25,000 in Social Security income. So now the $39,000 comes over here to the column in 4B, but you'll notice that the taxable amount of Social Security is no longer $18,525. We have to pull an additional $850, an additional 85% that was not taxable before. We have to pull that over to the taxable column in Social Security. So now 6B column is $19,375 for a total income of $58,525. $58,375 and an adjustable gross income of $58,375. So that is where his, and then obviously he's going to have a standard deduction off of that. But that is, and the standard deduction is going to be the same in before the trip and after the trip. Bob is single. So that would end up being his taxable income. But this is why Bob paid a 40.7 rate on that additional $1,000 that he realized from his IRA contribution. This calculation right here, it increased his AGI by $1,850. It didn't increase his AGI by $1,000. It increased it by $1,850. I hope that makes sense. I know it's rather confusing. Taxes are anything but logical, and this is popularly called the Social Security Tax Torpedo. On part 4 of this series, we're going to talk about how do we actually mitigate against this? Is it even possible? Well, for some folks it may be possible. For other folks it may not be. They may just be in that torpedo zone regardless of what they do. But we'll take a look at this on part 4 of our series on Social Security Tax Torpedo and our Brain Teaser series. If you want more tax planning videos, hit that subscribe button. I'm Jeff Montgomery. We'll see you next time.